Yeah, there's a lot of new stuff with Robinhood here. I know that you heard my Portnoy. Have these guys have to take responsibility, and I know you have a different opinion than that. So let's start there. What's going on? Because we saw a lot of these big guys get out of their positions now, right? And these little guys, yet you also hear them say, hold the line, hold the line, hold what line? It's pretty crazy out there. I don't know. It's not that they have the responsibility, but they do have the responsibility, but still, people have to do their own research. But it's when you have an influential person telling you what to do, now you're losing money. Yeah, I don't know.
Yeah, I totally understand what you mean on the influencing part and maybe getting some people in. But yeah, I mean, ultimately, if you have the conversation long enough, I think you got to get to the realization that, hey, if you went ahead and made the order and you bought it, you were taking on risk, whether you knew that or not. And it's like you point to, this is going to be a great, this is, I hate to use the word fascinating, but this is fascinating to me from a lot of different angles. And like you've talked about in the past, this is going to be a great thing for younger investors because the best thing you can do is lose. I don't want to say wiped out as in wiped out, not being able to get back up and try again, but to get that gut feeling, to get that emotional feeling of loss, and it sucks. It's terrible. And you don't have to buy a stock and lose money to get that same feeling. But I do think that's going to happen, but that's normal. Are some people going to get pissed off and, say screw trading or screw investing altogether? Yeah, probably. There's percentages of people in there. That's okay. Are some going to learn from it and maybe go on to be very successful? Absolutely. Those all fit in the same funnel. And I think that's, ultimately, I think that's really good overall. To your point, yeah, I understand. And I'm not going to say I'm completely up to speed on this because if you go through any of the Reddits or tweets, I mean, they're happening so fast and you got millions of, if not, you got hundreds of thousands of people on the Reddit Wall Street Bets, if not millions. So I don't want to act like I'm completely up to date, but to my knowledge, Portnoy was never in GameStop. He was buying AMC and all that kind of stuff. And yeah,
Nokia.
If you only know him from the trading, I guess I could lean a little bit more towards why you understand the responsibility. But if you know him, if you ever check, like, do you check his Barstool Sports app at all, or have you ever seen any of his commentary on gambling? So he's like a Donald Trump. He is out front saying, hey, I'm rich. This is what I do. You do your own thing. I can bet 100 grand here or there. You can't. So I got to respect him for he seems to be very consistent on my point. And that's why I have to stop at the responsible side. But I give you influential. And if people are losing money because they're, on him, they're going to get pissed at him. He's dealing with blowbacks. He's getting called a suit. And I'm sure that people think that he made money and got out. But, supposedly he lost a bunch of money. Now he's back in as of this morning in certain stocks. So the saga continues.
Yeah, I mean, I think he's good for the markets. I mean, he's everywhere now. He has a big following, and he's gotten a lot of young people on. But again, there's just a responsibility. Like, I hate when people go on TV and they'll say something and they'll never come back on again. At least he's going to come up and follow up and say, hey, I lost this, I lost money, which I respect. But there's no accountability out there, right? And I think people lose sight of the fact that when you're on TV, CNBC, Fox News, whatever, business news, there's tons of people watching you and listening to your advice and are going to take their money, their personal money, and invest it according to what you're saying. Yeah, that's one of the things I loved about Jim Cramer, where, working with him, it was really difficult. But, when he got things wrong on TV, he was throwing shit. He was pissed and he wanted to stay away from him. But I like that. Like, he understood the responsibility. He understood that, wow, I just lost people money. And I don't know if he understands that yet, but I know, some of these bets aren't working out for him, and he's been fantastic the past 6 months, but, I don't know. I hope he continues doing what he's doing. I know that he wants everyone following to make a lot of money, and that's a good thing, but sometimes things backfire a little bit, and, a lot of guys have been holding GameStop right now, getting the shit kicked out of them, it's pretty crazy, but let's stick with the same subject, but move on from that is Robinhood, because Robinhood went on TV and said, we're okay. We're perfectly okay, right? No, these are requirements. And then, a couple days later, they raised over $2 billion, $3 billion. And, well, they're saying, well, we were required to the rate, like, you went on TV the week before last week and said that, no, everything's okay. And this wasn't our fault. We're not we didn't make a call to Citadel or anything like that. But now, these guys needed to raise money, and, that now that they postponed their IPO indefinitely because, they're losing tons of accounts right now. And there's a lot of investigations being launched on them.
Yeah, and lawsuits, investigations and class action lawsuits. I know those are getting popular. I read somewhere that this is going to be a movie. Did you see that? It was,
Yeah.
And no doubt it could be and should be, for a couple different reasons. It'd be a lot like any other Wall Street movie, you know.
Portnoy wants Bradley Cooper to play him.
Oh, there you go. Who doesn't like Bradley?
They all
Bradley
know.
Cooper?
Kramer mentioned it. If you need me,
oh, that's hilarious. Yeah. Oh, yeah. You can do what's it called, cameos or whatever.
Yeah.
The Robinhood thing, I think. Let me defend the Goldman Sachs here real quick, because as you know, they were getting ready to do the IPO, initial public offering, take Robinhood public, and they had nothing but momentum, especially before this GameStop. They were growing users. I think they added over 3 million last year alone. You know, they were changing the game. They were making other huge brokerage follow their lead to zero commission trading and all that kind of stuff. So they had all this momentum. You bring in Goldman Sachs and every other Wall Street banker that's going to take them public. And what do you do when you're starting from the finish line, from the start line to the finish line, Frank? You piss off millions of people and lock them out. So in defense of the big greedy banks, man, I feel sorry for you.
It is crazy. It is, yeah.
Because the IPO is now on the back burner, and you know Goldman's, you know, somebody bought a Ferrari with a bonus coming up. Now they're pissed, and you know
there's tons of people. They're moving to they moved to the Cash App on Square, who benefited. There's another company just raised $125 million, which is another free trading platform. I mean, talking about millions of people just getting off the account because they're so pissed off. They may come back or whatever,
yeah, absolutely.
But it's just the way this went down, where it's the first time in the history of the markets where you said we halted stocks because you're not allowing people to buy them, right? It was different with short selling, and sometimes when you look at banks who are on margin or institutions, you could destroy, and they have so many again, the whole financial system would have collapsed if they continued after they let Lehman fail. I didn't want them, but they had a bailout, or our unemployment rate probably still 25% today.
Yeah, and the craziest thing with Robinhood here is Vlad, and I might be butchering that, but like you said, he went on TV and said, "Oh no, we weren't under pressure from anybody." Then he wrote an op-ed, I believe it was in USA Today. It's been published all over. But the crazy thing to me is that you're either the worst PR, bad communicators, and you made a dumbass decision at the worst time to make everybody mad.
Why did they make that? Like, if it was. That's the thing, a full day, though.
I know. Exactly. That's what I'm saying.
Went by without them saying that the reason why they shut these accounts down and put restriction on. They did not say it the whole entire day. If they would have came in and said it right away, I don't understand that.
Or at least said it beforehand before they limited stuff. And that's what I'm saying. It's either the worst public relations, communications, screw up in a long time, or there's a bunch of shady stuff going on behind the scenes, and their settlements and or trades and or whatever behind the inner workings of this Wizard of Oz isn't going well. So the funny thing is that if you keep asking those questions and go up, because then the CEO of Robinhood came out and said, hey, no hedge fund, because Citadel and Point72, who loaned them, or not loaned them, but put money into Melvin Capital, which, did you cover how much Melvin Capital lost? Did you see the figures?
I didn't see the figures yet. I know it was. I think
roughly, it was a $12.5 billion hedge fund.
Was it like 5 or something?
They lost 53%.
Yeah,
and that was, I think, over $5 billion in January alone with that short squeeze.
Just them, because I thought it was 53% the whole.
Just
fund
the Melvin
was down,
Capital,
not just the GameStop position. But yeah, that's.
So Point72 and Citadel. Citadel fulfills or gets a lot of the orders from the Robinhood trading app. So he had to come out, Vlad, and say, hey, it wasn't Citadel, because that was a lot of rumors, and Portnoy was on that, and everybody was yelling and pissed off, rightly so. But who to be pissed off at? So they said it was clear. It was the clearinghouse. The Robinhood CEO Vlad came out and said it was the clearinghouse. Now, most people probably don't know, and if you want to go down a rabbit hole here, we're going to get down a rabbit hole, Frank. The Depository Trust and Clearing Corporation. Mm-hmm. DTCC.
That's a story now. Yeah, and I'm glad they're looking at this.
Well, and hopefully they will. I don't think that they will, because there's two avenues to go here. One, you can just bury it, because it's basically a monopoly that controls all the settlement and all the trades. I know Frank's had experience with this, but if you go back to 2008, remember our old friend Patrick Byrne from Overstock when we recommended that?
Yep.
So Patrick Byrne, CEO, founded Overstock, is no longer there. He's on the other side of the world. He's kind of just hiding out.
I don't even know where he's at.
He's interesting, but he has a website, and it is it Deep Capture. And back in 2008, 2009, and I remember seeing this, and I was interested in this, because he was always arguing that the crash in 2008, 2009, yes, was due to leverage and stupidity, but it was also a big settlement issue. And he has a lot of negative things to say about the DTCC and the ownership of that and how it operates. I don't think anybody's going to look into that nearly the way they should. I think the heat's going to come down on either hedge funds and Robinhood, and you're going to have a lot of regulatory limitations put on individual investors, which I think is a bad deal. But go to Deep Capture, read a little bit about the DTCC, who owns all the stocks in settlement, who owns all the certificates. It's a wild Wizard of Oz story, but it's just ironic that retail brokerage and retail investors brought all this into the limelight. So we'll see where we go.
So it's called like T+2, where it takes 2 days to clear some of this. So that means, if you're looking at clearinghouse, they settle trading accounts, clear trades, maintain margins, delivery, regulated delivery, reports trade data and stuff like that. But settling these trades, this is why it's a big deal, because this happened to me. So if you notice in our promotions, we say Frank Holmes got me into a company called Hive Technologies, right? And someone dropped out and I got in, and this was before the market really took off for crypto. So it's like, I think it was like late 2017. And I said, sure, I'm in. And then it was, $25,000. I think it was, he got me in 25 cents. So I had 100,000 shares. And crypto went crazy, and these guys mined for Ethereum and Bitcoin. So the stock went to $6, right? I don't know, 25 cents, $6. And there's like a 4-month lockup period. So the shares at the clearinghouse, right? You got to go through this whole thing. Like, try there at the clearinghouse, and the lockup period ends. So this stock is 6, it goes to 5, it goes to 4. All these guys are shorting it, right? Shorting it, selling it, and shorting the shit out of it, right? And I called my broker up, who's a great broker, and I said, dude, how come I don't have the shares yet? He's like, it took 2 weeks. And I told him, I said, by them having the shares, meaning that in order to short, you have to be able to lend the shares out. They have to be someplace. And in the clearinghouse, within that period, they could be short. And that's a big deal 2 days when you're looking at look at the 2-day moves that you saw. I think, what was it, 2 days ago? Wasn't GameStop at 250? I mean, went from 350 to 250, now it's 90. I mean, 2 days is a big deal. And finally, I was able to get out of that stock. You know what? I got out at $1.80. I'm not complaining. It's amazing. But, I was calling him
I'd be complaining.
At 354. I bitched to him, but 354, talking about a lot of money that I wound up having to get out at $1.80. But, these are issues. And I talked about this being a revolution where this is, you saw, what is it? Dan Loeb said he has no short positions. You saw in January, he's usually short something, right? Whatever.
Yep.
You had Citron Research say without publishing these, or publishing reports. They're still going to be shorting, I guess, but they're not going to be publishing, meaning they're not going to do that whole marketing campaign they do. But it is having big changes, and let's see what happens from it. But I will tell you that as of now, GameStop is in the 90s, and again, I think it's going to go. It could go high before it goes low, but it will go low. AMC is down to $8 now. Again, AMC I think is an insolvent business. Hopefully that they make it. They did get a little bit of funding, which started this move, and then the short squeeze and everything. But it is pretty crazy, man. It's just, it continues, and it's not going away anytime soon. But I want to turn the attention.
Hold on real quick. Okay. Can I add one more thing? Because
sure,
I think the real issue here is just what you said. And I wish that the investigation would lead to, is there naked short selling, which means you're selling stuff you don't have possession of, which is entirely illegal by rule.
Yeah.
It's supposedly not to be able to be done. There's been tons of cases with companies and short sellers going back and forth with hedge funds, especially 2008, 2009. That's the real issue, and what we should be looking at. What I fear is that the issue will be turned and blamed on hedge funds and shorting, because people shorting something isn't bad. It's not. No, it's not wrong. It's not illegal. For the market. It's a market.
Yeah. You're hedging yourself. You could hedge yourself.
Yeah, exactly. It's not. Short, yeah. It's not that evil shorts are. Do they do shady shit a lot? Yes, and that's when you should get them and punish them.
I mean, they're shorting 2 companies that got hurt from the lockdown, right? I mean, GameStop which has stores, right? That's not an online operator, but they have stores, and you have AMC. So it's almost like these companies, fire employees, and that's a lot to the Reddit crowd who's saying that you're destroying companies that are being forced to close, and you pile it on, and you don't give a shit.
Right.
So,
but this, I mean, like I said, I am taking a side here on this one, because it's not the coronavirus and the shutdown didn't change these business models and drive them out. AMC, I'll give you that one.
Yeah, AMC.
But GameStop, I mean, that was going downhill, or until they turn it around, or it's just going to slowly bleed out. But the big thing there, I think, should be looked at is the naked short selling and all that kind of stuff. But I fear it's going to get turned to hedge funds, and then the little guys are going to have more restrictions on trading, i.e. us, and that's going to be a bummer. But we'll see how it unfolds.